A stunning turnaround. The blue chip Dow Index is now positive for 2016. Who'd have thunk it? It erased losses from the market's worst start to a year ever and reversed a remarkable 2,000-point drop from the recent low. Today's climb was helped by a rise in oil prices and continued enthusiasm following yesterday's Fed decision to alter its interest rate hike forecast. The Dow Jones Industrial Average gained 155 points to 17,481. NASDAQ added 11. The S&P 500, briefly positive for the year too, climbed 13. So while there are a number of things working in the market's favor, there are also a host of things that aren't. Bob Pisani explains.
It was another up day, this time on the weak dollar, and yet there's a lot of skepticism. What's the problem? Here's the good news. What some are calling the Goldilocks market. First, there's no recession in sight. Second, interest rates are low. Third, inflation's up a little bit, but not significantly. And most importantly, the jobs market is in good shape. Given that, why does the market continue to have such a tentative feel to it? And why did Janet Yellen seem to reflect that tentative feel? It seems to go beyond the somewhat boilerplate FOMC statement that global economic and financial developments continue to pose risks. The short answer is that there is far more pain, anxiety, and danger in the U.S. economy than the statistics suggest. Growth is slow, wages are stagnant, and there's a lot of sort of disappeared workers in the economy who don't look for jobs or who don't even qualify for jobless benefits anymore. And that's why we have Donald Trump and Bernie Sanders. And this is why we have a very cautious Fed. They are not just looking at jobs and inflation, which is theoretically their sole mandate. The FOMC is looking at the overall state of the economy, and the fact that Trump and Sanders have gone so far this year on the dissatisfied vote is not lost on Yellen and company. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.